India's chemical sector has emerged as Asia's standout performer. It is expected to surge from about 178 billion US dollars in 2021 to between 850 to 1000 billion by 2040. Why is this happening? What is the reason for this shift? Well, hello everybody and welcome to Wright Research's latest video. In today's video, we will be deep diving into a particular sector. Even before we do that, if you've kind of guessed this particular sector that we might be talking about, drop the name in the comment. That will bring some engagement to the video. And do not forget to subscribe to our YouTube channel. Through our YouTube channel, we keep providing and updating videos that talk about the market, the outlook of the markets, the strategy, industries, sectors, and so on and so forth, right? If you would look at it on a larger basis, the sector that we'll be talking about today is the chemical manufacturing sector. India, as of today, is rapidly emerging in this particular space, right? And why is this happening? What is the reason for this shift, right? This shift is fueled by robust domestic consumption. So we are consuming a lot more. Strategic global changes. There's a lot that's happening on a global level and that's impacting this, and India's inherent competitive advantage. So we have an inherent competitive advantage that is helping us, sort of deliver fantastic returns and output in this particular sector. So we'll deep dive into it and let's start the video. Even before we, sort of jump into it, let's try to understand what is happening in the global chemical space, right? What are the industry trends that we are looking at on a larger level, right? So the global chemical sector has experienced significant fluctuations. Historically, this has been a strong performing sector, but in the recent past, post-COVID, this particular sector has faced a lot of bottleneck and challenges. Why is this? The demand patterns have been shifting. People are, sort of using a lot more vehicle to move around. The geopolitical tensions are increasing. The supply chain is disrupted and the regionalization across the industry has increased, right? You would be surprised to know from January 2023 till January 2025, the industry returns declined by 3.6%. Now you compare that with the MSCI World Index, which grew by 22.8%. So there's a huge difference that we see. But within the chemical sector, the interesting part to note is that the specialty chemical sector has been sort of, growing. It has been very much resilient to all of these global changes and demands that are taking place. Moving ahead, let's look at the performance of India's chemical industry, because right now we are in the country. It makes sense for us to discuss about how the chemical sector in our country is performing and where it is headed, right? So despite the global turbulence, India's chemical sector has emerged as Asia's standout performer, right? Across Asia, we've been the best. We've yielded returns of around 10 to 12% within the chemical sector, and this has been between January 2020 to 2025. The industry saw significant recovery post-pandemic, right? But it has faced declining margins, leading to relatively flat returns from 23 to 25. So as I mentioned, historically performed well. In the recent times, it faced a lot of challenges and the margins have shrinked. But if you look at it on a backward basis, you would see that the margins peaked around 17.5% in 2021 before dropping to approximately 13% by 2024. That's a decline of more than 4%. Right now, what we did was we analyzed more than 200 chemical firms and we found out that the revenue contraction has been at about 7% from 2023 to 2024. Right, so this is data that tells us that the revenues have been shrinking, the margins have been shrinking. Now, if you look at the EBITDA margins, that kind of rose, right? It peaked, as I mentioned, and then it declined. This shows that the segment is extremely volatile. Now, let's look at the specialty outperforming space, right? The specialty chemical space that has been outperforming. So within the chemical industry, specialty chemicals has notably outperformed petrochemicals over the last 5 years, right? So petrochemicals, just to give you an example, say somebody like Reliance operates into it, right? And specialty chemicals might be, in segments where the industry is niche and there are certain bases of chemicals that are used. Specialty chemicals on a larger basis showed moderate margin declines compared to petrochemicals, maintaining beta stability. Key segments like food and nutrition, flavors and fragrances, and adhesives and sealants grew robustly, while agrochemicals and plastics, additives faced revenue and margin pressures. Petrochemicals as an industry and as a sector itself experienced sharp volatility with margins rising to 24% in 2021. This was due to the post-pandemic recovery but dropping significantly again to 8.6% by fiscal 2024, right? This was because of oversupply. The weaker global demands also added on to it, and the rising crude oil prices made it even worse. Now let's look at India's growth potential in the chemical sector. India's chemical sector is poised for exceptional growth. So the growth trajectory over here that we are looking at might be on a next level basis, right? It is expected to surge from about 178 billion US dollars in 2021 to between 850 to 1000 billion by 2040. So there's a huge trajectory that we are looking at. By then, India could account for approximately 10 to 12% of the total global chemical market, and that's massive. This will be driven by a robust annual growth rate in domestic consumption of 9 to 10%. Let's look at specialty chemicals. Specialty chemicals in particular are projected to reach about 64 billion by 2025, growing at a CAGR of 12.4%. This segment maintains trade surplus, making India an attractive global supplier. Additionally, segments like paints, coatings, flavors, fragrances, amines, adhesives have expanded swiftly by diversification and geographical reach, right? Nonetheless, these segments faced margin pressures due to raw material price volatility and competitive market dynamics. The paints and coating segments notably benefited from growth in consumer durables, automobiles and related sectors, right? Now imagine this, when the specialty chemical space is increasing and it has a very good growth trajectory, then what is stopping us from investing in it, right? The amine segment, while if you look at it, grappled with fluctuating raw material cost, right? So in the specialty chemical space, the biggest bottleneck is the drawbacks in terms of, the material cost that might rise. On the other hand, sectors like agrochemicals, dyes, pigments, inorganic chemicals, and surfactants struggled due to weakened revenue streams and profitability constraints. Inorganics encountered declining profitability after early highs driven by reduced European competition and Chinese market constraints, right? New capacity additions and intensified Chinese competition reduced utilization rates and compressed the margins. Segments experiencing commoditization such as surfactants recorded slow growth and tighter margins. Conversely, advanced materials, water management chemicals, and specialty polymers exhibited moderate revenue growth, but it improved EBITDA through technological advancement and product quality enhancement, highlighting the importance of consumer sentiment in driving the specialty segment forward. Now, what are the drivers of future growth, right? Now, this is very important for us as investors to understand, because what we invest is in not the today of the company, but the tomorrow of the company. So what is the future growth that we are looking at, right? India's competitive edge in the chemical sector also arises from several crucial factors, including low operating cost, abundant labor, and effective strategic planning by businesses. Its labor costs remain among the lowest globally, complemented by competitive utility rates and robust EBITDA margins. Furthermore, Indian chemical companies excel in profitability, often achieving higher EBITDA per unit of investment compared to global players, which is fantastic. The operational cost disparity between India and China has narrowed significantly, enhancing India's attractiveness. Now, if I look at the drivers of future growth, there are about 6 points that we could, sort of break down it into. The number one, domestic demand and infrastructure, right? Growing infrastructure projects and consumption in India offer significant growth opportunities, particularly in electronic and battery chemicals, linked to semiconductor and electric vehicle investments. Number two, the global expansion, right? India's chemical exports have grown notably, reaching 39 billion in 2023 from 23 billion in 2015. There's considerable untapped export potential, especially if Indian firms increase their global presence, right? So the export volumes might be massive. The government is also supporting in this. The Indian firms just need to expand their global presence. Number three, strategic mergers and acquisitions. Indian chemical companies can strengthen global competitiveness by strategically acquiring advanced technologies, enhancing R&D capabilities, and integrating into international value chains. Sustainability and initiative being the fourth one. Sustainable practices including renewable energy, bio-based chemicals, and the circular economy solutions are becoming critical growth drivers, promising reduced cost and emissions. The fifth one, capital expenditure management. Effective project execution and strategic capital allocation will be very crucial. Managing cost overruns and delays, averaging 19%, can significantly boost returns, from planned investments of approximately 11 billion. Now, the sixth pillar when it comes to the growth driver is digital transformation. Advanced technologies like AI, machine learning, digital twins promise significant operational improvements, potentially boosting the EBITDA margins by 6 to 8% through efficiencies in manufacturing, procurement, and supply chains. In conclusion, India's chemical industry stands at a transformative juncture, driven by robust economic fundamentals, proactive policy initiatives, and growing domestic and global demand. Companies investing in India's chemical sector today will tap into a dynamic market ripe with substantial growth opportunities and global integration possibilities. This is all that we have in regard to the chemical sector and space. Do not forget to like, share, and comment on the video. If you have any questions, feel free to drop it down in the comment. Do let us know what other topics you would want us to cover. Happy investing and see you the next time.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.